Hi friends, so I want to show you my day trading strategy. Now to give you a bit of context, I am not a full-time day trader. I'm just someone who is profitable day trading. I personally do not think I will ever be someone who only day trades for a living because day trading for a living is very scary. There is just so much pressure when all the money that you're making relies on you being a full-time trader. But I do enjoy trading, and being a part-time trader does bring in some additional income. For me, that's just a couple hundred every single month. That's not a lot, but maybe in the future I will scale up. But again, it's really, really hard to turn it into my main source of income. So I just want to share with you my current trading strategy, and I hope that you'll be able to learn from it, adapt it, and turn it into something of your own. So let's take a look at what I have. All right, so let's start off with my trading journal over here. This is the one that Sarah created for me. So this is basically what I use right now. You can see my profit right now is 575. I have about 65% win rate. My risk to reward ratio is negative 1.8 because the strategy that I use has a higher win rate but a lower risk to reward ratio. So let's jump into the trading journal. Okay, let's look at the main strategy that I use. The first strategy that I use is the 15-minute breakout vertical. So basically I watch for a 15-minute breakout, right? Basically here, a 15-minute breakout. I want it to retrace to the 15-minute or through the 15-minute. And then I want to see a candlestick pattern that goes against the retracement. So your first entry could potentially be here when you saw a huge push down, and your second entry could have been here when you retrace back to the 15-minute breakout. So that's basically the entry requirements. Now, there's a lot of nuances that is not written here, right? Market sentiment, economic news that day, price action, and remember to draw in your supply and demand zones as well. This is what gives you an edge. So if you see this is one entry. If it doesn't happen, then you're going to use different types of strategy, right? So, but generally the past few weeks, this 15-minute break has been very, very good. And you can see that I generally get winning trades from this. I only have 3 losing trades. The rest are all winners. So overall, yeah, you can see it's doing pretty well. The total profits from this particular edge and strategy is 700. My biggest loss was this 220, which I completely stopped out of. I should have exited earlier. So the goal of the 15-minute breakout is not just to buy a call, sell a call. What you're doing is selling a vertical spread. Now, the reason why I want to sell a vertical spread, because then there is time decay that is on my side. So price can potentially go flat, right? It just goes flat. Price can go up. Price can go down. That's what people usually think, but that's not really how the markets work. There's actually 2 more possible combinations. Price can go up really quickly and price can go down really quickly. When you sell a credit spread, let's say I'm selling a put credit spread, so I want the market to go up, right? What I'm doing is taking these 4 possibilities as a win. Only if this happens, then I will lose out. Remember, it is still a net long strategy, so if it goes down all the way, then you will still lose money, but as long as price doesn't move down too quickly, you will be able to capture a huge win over here. So that's why I use credit spreads, and you can see that in my journal over here. So the type is a short because I'm selling a spread. The execution is a put credit spread. Put credit spread is highlighted as green because I am going to the long side. I think one other potential strategy that I want to show is the pivot point reversal, which is a very simple strategy that basically looks at pivot points, and when I reach it, sometimes I decide to go opposite. So this is high pivot point 2, low pivot point 1, low pivot point 2. This is the number of percent that it closes within that pivot point. 20% of the time, price close within high pivot point 1, which is here, and 18% of the times it closes between here, 9% of the times it closes between higher and lower points. The calculations are taken based on the previous days or the past previous 30 days highs and lows. It takes an average and then plots those points, and then the pivot point 2 just adds 1 standard deviation away to the calculation. You can see how many days it has calculated. So in the past 132 days, this is very useful for me because I can average out. So for example, if I head over to the 1-minute chart, TradingView only allows me to see the past 36 days. I can see that the pivot point has shifted. Now, if we open up and put this to like the 4-hour chart, we can analyze 6,000 days, and we can see that generally it should be about 22% of the times it closes between high pivot points 1 and 2, and about 10% of the times high pivot point 2. So we can see that about 20% of the time we close between pivot points 1, and about 10% of the times we close between pivot points 2. So when we see days like this, when we are looking at the 1-minute chart, it's only looking at the past 26 days, and we see that for the past 26 days, we are barely closing above high pivot point 2. That is letting me know that, hey, we are most likely going to be on the downside, so we should always be taking the downside. Now, if we take a look at it today, it's live right now. You can see how price has moved against a particular pivot point, right? So how am I using the pivot points? Basically, when I see it hit a pivot point, if I see a very strong reversal pattern, I would normally go against it. Number two, it also gives me the percentage chance of it closing within. So let's say for whatever reason, I'm already at 4362. I know that there is a 77% chance that it does not close below 4345. So I may want to sell a call credit spread that is probably placed somewhere along here. So this helps me mitigate certain risk. This also helps me figure out where I want to place my trade. And you can see sometimes we do get good reactions. Like today was a good reaction. You can see how it has gotten reaction points here as well. This strategy was not developed by me. This strategy was developed by John Carter. So I cannot take credit for that. But this average pivot point is coded 100% by me. You can see how the pivot points have been a pretty strong level throughout history. And again, it just helps that. So let's run through all of last week's trades and see what we can learn from it. And I hope you guys will be able to really benefit from it as well. So let's start with this one. I think this was very clean. This one is a put credit spread. Yeah, it basically just went up. It broke through the 15-minute, retraced back down. I basically entered because price was moving really, really strong and basically went up, retested a trend line, moved up, and I exited right there. So that was very, very, very clean. I believe because that day was a very clean day, I basically entered one here, I exited here, I entered another one, and I exited here. So this is basically a very clean day. So I got $27 from that. When I made $27 off that, and the second trade, I also made $90. So that puts me at $100 per day, and I just basically done. And then on Tuesday, we can see the pivot point reversal play that I just talked about. Price basically hit the pivot point reversal. This is L2. When it hit L2, I basically decide to enter in a long. And because I know that the chances that price will hit so much lower is very small, so I took that trade and I basically won that trade. Pretty simple. I skipped Wednesday because I think FOMC meetings came out. Let's take a look at this. So this is a 15-minute breakout vertical. That's the asset that I choose. So, sorry, that's the strategy that I use. I traded it on the SPX again. So I see price moving down, breaks through the 15-minute right here. So I took my entry, price moved down very happily, but then it consolidated. But because I am selling a call credit spread, that means that data decay is on my side, so I didn't care. Eventually, it went back up here. I believe at this point, I was still profitable. Eventually, it dipped down and I made my profit there. So that day I made $100 in profit. My entry was $1.50. My exit was 50 cents because price was moving down really hard. So I decided to just exit right there. And then Friday was a pretty good day as well. I had written down my full market game plan, right? Pre-market screenshot, right? It shows huge weakness, right? Market showing weakness. This is the pre-market. So markets may be weak and may move down. I'll open upon the first retracement. That's scenario number one. Scenario number two, market may open to gap fill. Because remember, the pre-market shows huge weakness. Because pre-market shows huge weakness, that potentially means that it could potentially try to gap fill, opens up here and moves up. So market may try to gap fill and range due to overall market weakness. Because remember, when we look at the pivot points, we are definitely most likely going to be heading to the downside. And the daily VIX, which is this one over here, is on the rise and it's close to 20, meaning I can get much lower delta at a good price. So this is the screenshot of the entry. So early entry for theta decay. So we see a breakthrough, the 15-minute breakdown, a retest, hovering just around VWAP. And I entered in right here. My idea was that if price is hovering around VWAP, we might have a good chance of it stagnating. And when that happens, theta decay will be on my side. And also because we broke through the 15-minute really, really early, that means when I'm entering here, it is still within the first hour. So theta decay is really, really on my side at this moment. So even though price fell here, I was down $40, but then eventually price pushed up. But I decided to hold on to it because we were at -3 ATR as well, which is this rainbow thing over here. So eventually it went up and I basically took profits at that moment. Yeah, so this was a pretty good day, right? So price eventually moved up and I exited right here. This was a one profit trade. So this is just me sharing with you my trading strategy, sharing with you my trading journal as well. I hope that this helped you a lot. If you have any questions, do let me know. I could potentially run through some of the indicators that I have as well. I code most of my indicators, so except for this one over here, this is coded by someone else. But if not, most of the other indicators that you see, they're all coded directly by me. So you cannot find this anywhere else at the moment. I will probably share some of it with you guys. So this rainbow thing over here is basically the average true range. You can just see the average true range 1. here, 2 here, 3 here. When price suddenly moves out to the third average true range, normally it tends to be a retracement. So for example, if I'm going long here and I see price dip all the way down here very quickly, I would usually just hold on and see how price reacts, because there's a good chance that it will revert back to the mean, and that's exactly what happened here. So that's why I have the average true range here. And on the side here, we have these tables that kind of shows me the trend. So this is based on the weekly, daily, 4 hour, 2 hour, 1 hour, 30, 15, 5 minute exponential moving averages. It just helps me get a glimpse of how the markets are doing. So I'm not really used to creating long form content on YouTube yet. So I hope this has been useful for you. If it is, just let me know which part you want me to focus on, and I will try my best to talk to you guys about it as well. I know a lot of people are trying to day trade as well, but for me, again, personally, I am more doing this like a side income. It is not my main income. It's just not my thing. So let me know if you guys would like to see more of it.